Also, we'd love to answer your questions as we go, right? Derek and I like to have a live discussion. We want this to be relevant to you. We want to answer your questions, as challenging as they might be. So please use the chat feature as we're walking through here. Lay your questions out there. We'll also have a few minutes at the end to chat through anything that has come up if we weren't able to hit on it as we're walking through this presentation.
I don't want any of the hard questions, Brian. Those can go to you. I'm here just for good looks. Paige bought me a new vest last night just for this. So,
Okay,
God bless her. She's basically
working.
put lipstick on the pig, but that's okay. I can
She
live with
did.
that.
Okay, well, we will take it. Good enough for us. Now, to get ourselves rolling here, what are we going to hit on? I gave us a brief description. Number one, it's the economy, stupid. Paige overrode that. She did the slide design for us here. I can't say stupid around clients, so we have to say silly. It's the economy, silly. To file or not to file, that's a changing conversation. That finish line is moving in terms of when claims should be filed or maybe when they're best not filed. Higher deductibles, what's happening there? How is that impacting your coverage? Roofing coverage, that's been arguably one of the most substantial changes in the home insurance world in the past decade. If your policy has not been impacted yet, it almost certainly will be in the next year or two. So what's happening and how does that impact you? And then get ahead by avoiding common mistakes, right? What are those easy to implement action items? How do we squeeze the most value out of our insurance plan? Where can we get the bang for our buck? And how do we make sure that we're not making catastrophic mistakes with our insurance plan?
Brian, are these topics and the information that we'll be discussing relevant only to our client base and the insurance companies that we work with, or are these very general industry-wide topics and the advice and guidance that will be provided can apply to almost every insurance company in Michigan?
That sounds like a loaded question, and thank you for bringing that up. You are correct. This is applicable. It's Michigan specific. This is for Michiganders, but we're not just talking about the insurance companies we work with and the ones we are most familiar with. This is what we understand from our colleagues and other professionals in our field. Obviously, we rub shoulders with a lot of insurance professionals in our office, but across West Michigan and across the state. So this is more of an industry update as it applies to those of us in Michigan.
Cool.
Rock and roll. It's the economy, silly. We're going to touch just briefly on this. Everyone knows what's happening in the economy and how that's impacting the insurance industry at this point. Really, what you need to understand is insurance companies collect money mostly in one fashion, what we all pay in premiums, right? And then they spend money in one fashion. What do they pay in claims? Claim payments have basically doubled since 2020, right? Not only are there more claims being filed than there were in the past, but the average claim payment is up substantially because of the cost of labor, materials, administrative expenses, adjusting expenses. All of those expenses are up. So yeah, my car is a little bit older, or home values have kind of flattened out, or maybe inflation is slowing down. That's certainly true. But the insurance industry has been behind the ball for the past 3 or 4 years in terms of where they need to be from a rate standpoint in order to cover the claims that are going out the door. See things in the news about insurance companies pulling out of states, not offering coverages, making some dramatic changes to what they're willing to offer. That's in large part because they haven't been able to collect enough premium to pay the claims that they know are going to be incurred based on claim data from the past. So,
Brian, this seems like it's just fluff. Very easy for us to say, yeah, your premiums have increased because the thing that your policy does, the value of that policy is the claim payments. It's going to be there when you need to use it and extract something from that policy to help make you whole financially when one of those unforeseen things occurs. Can't we just say premiums are up because claim expenses are up? Wouldn't every insurance company just say that and have them all just raise prices and kind of gouge consumers? Or is there some sort of regulatory requirements that insurance companies need to comply with if they do want to raise pricing?
that's a great question. And I'd say that's a two-part answer. Number one, we're fortunate to be in Michigan where it's a competitive market for the insurance landscape. right? There are several states that do not have a competitive landscape. No insurance companies want to operate there. If you're thinking about Florida, correct. Thinking about Texas, thinking about California, you don't have a competitive landscape. You do not have insurance companies competing for business. That's bad for consumers. But number two, insurance is heavily regulated at the state level. So in order for insurance companies to adjust their rates up or down, they have to have claims data to support it. And they have to submit that claims data to the state of Michigan. It all gets reviewed in that rate filing. It takes months and months and months of review. And then voila, the state looks at what they've paid in claims, what they anticipate to pay out based on that prior data, and then approves or modifies or rejects that adjustment to that insurance company's rates.
So if I have a crystal ball and I can predict what's going to happen in the next year or two as an insurance company, and I want to raise my rates, but what I predict is much different than what's happened the past year or two, my crystal ball is worthless, right?
Too
The
bad.
insurance companies are reactive when it comes to what has happened in recent years and do they need to adjust rates to account for that recent claim experience? They can't look forward and say, we think there's going to be another catastrophic event and just our gut is telling us we need to raise premiums. So the regulatory environment is very, very strict when insurance companies do plan to raise or, like Brian said, decrease rates. Yes, believe it or not, if an insurance company wants to reduce their rates, the state of Michigan has to approve it. So very, very heavily regulated, and that should give consumers a little bit of faith in the fact that premiums are up because industry-wide claims expenses have been up significantly.
Right. Right. So who cares? You've heard about that plenty over the past 18 or 24 months, right? At the end of the day, what do we do about it? And this is a part where your insurance agent needs to play a role in your coverage decisions, right? Uh, we need to focus on the big ticket items. A lot of coverages have changed dramatically in what they cost. Some of those optional coverages, or insuring your bicycle, or service line coverage, maybe water backup coverage. Some of those have become much more expensive than they would have been in the past for several reasons. Do we need to have that? Are there things that we can peel out? Are there things where we can redirect our insurance coverages or our insurance budget to make sure that we're still in line with our budget, but we're not skimping on the big ticket items, right?
Yep, Brian,
Like,
I'll share an example real quick.
please do.
A lot of policies will include $2,500 of water backup coverage. In today's insurance environment, a lot of agents are saying you don't want to file that $2,500 claim, but if that's the maximum coverage that that policy has for that one type of incident, why are you even paying for $2,500 of coverage if you're not going to file that claim if something like that happens anyway? So that's where working with the agency and with your spouse when you're trying to make those decisions, if you have one, to figure out where does it make sense to strip some coverage off and either put the insurance premium back in our pocket to help manage our family household budget, or maybe redeploy those funds elsewhere, just given some of the changes in Michigan, which we'll hit on a little bit later when it comes to lawsuits and other big ticket items. So I think there's kind of a general shift in mindset from an insurance policy to a catastrophe policy. If something goes wrong and it's going to ruin your life, you hope that the insurance policy is going to apply and take care of you. It's going to ruin your week or even your month. That might be something that you just have to accept and self-insure those types of things.
Agreed. Derek, point four here, work on your credit score. We're not talking about a mortgage or an auto loan. What on earth is credit score doing in our presentation about auto and home insurance?
Good question. A lot of people think that insurance companies care about credit score because the insurance company wants to make sure that they get paid. They want to make sure that that person is able to pay the premiums on a monthly or semi-annual or annual basis to that insurance company that's providing the coverage. That may be a tiny little piece of it. The big part is that credit score is the number one most indicative factor of somebody's likelihood of filing a claim in the future. And as you might expect, the higher the credit score, the less likelihood of filing a claim. The lower the credit score, the higher likelihood of filing a claim. So a lot of people don't love that the state of Michigan allows insurance companies to use credit score, but that's not going to change. It's very, very representative of the likelihood of having a claim. So insurance companies are allowed to use it, and most of them use it very, very heavily. So something that was a huge surprise to me was the importance of credit score when it comes to the pricing of insurance. You want to make sure that you're modifying or managing your credit usage so that you're never exceeding more than 30% of your total credit allowance among all of your different credit cards, but you're also never exceeding 30% of that credit allowance on any one individual card. So kind of interesting to me that they would look at individual cards and the balance versus the limit versus the entirety that someone has access to. But that's something that matters. And so keeping a high credit score is the number one thing that anybody can do to manage their insurance premiums going forward. More important than a monitored burglar alarm or having a safe driving record or ignoring small claims and paying those out of pocket. Number one factor is somebody's credit score.
Derek, let's say I have a relatively high credit score and my home insurance premium is $1,500 per year. Okay. If my credit score were to be relatively low instead of relatively high, instead of $1,500 per year, what would you expect my home insurance premium to be? All else stays exactly the same.
3,300.
3,300. That's the impact that your credit score has on your insurance pricing. Whether you like it or not, that's the way the industry works. It's been that way for 25 years. It's not going anywhere. So that's an important component of how insurance pricing is done. It's important to manage your credit score to be as high as possible because it's going to pay you back in lower insurance costs. What's unique about Michigan, right? We, of course, way overdid it with no fault reform back in 2020. Everybody on this call has heard about that from Boer Insurance Group. You probably joined us for a webinar like this or maybe in person over at Thousand Oaks. You're all aware of what has changed in the auto insurance law. But what else has changed recently? Well, the Supreme Court in Michigan made a ruling earlier this year that said no longer is open and obvious a recognized offense in trying to dismiss a lawsuit. So open and obvious was something that homeowners, landowners, business owners, they would use when someone had their classic slip and fall and then sues that landowner or the business owner or the homeowner. And as long as that defense attorney could argue, hey, that's an open and obvious risk, that lawsuit would be dismissed. It wouldn't go anywhere. It would just be done. Well, recently, that was overturned. No longer can that homeowner or the business owner or the landowner claim, hey, that's an open and obvious hazard. Dismiss this lawsuit. No, it's going to go to court. So how does this impact us as homeowners? Well, thankfully, not as much as someone who owns a storefront or an apartment complex or a high traffic area. Those areas, those type of business insurance policies have become incredibly challenging to place and much more expensive. But even for us as homeowners, if I have a trampoline in my backyard, or I've got a big hole dug in my front yard because of some renovations or some landscaping, in the past, most of those lawsuits against me, when someone steps in the hole and blows their knee out, they'd be dismissed for open and obvious. Hey, a reasonable person would have seen that giant hole in the front yard. They wouldn't have stepped in it and blown their knee out. That lawsuit would likely be dismissed. No longer is that the case. It's going to be tried. There's probably going to be a settlement. There's probably going to be some amount paid to get that lawsuit to just settle and go away. So you talk to enough personal injury attorneys, and number one, should have said this as the slide started. You know, Derek and Brian are not attorneys. We can't even spell bar exam. So this is not legal advice, but the personal injury attorneys we work with have told us that the number of lawsuits being filed in the state of Michigan has ticked up substantially ever since that ruling. So that makes liability coverage more important. It makes it a little bit more costly, but the impact that that has in protecting your financial plan has become that much more critical to be cognizant of.
Open and obvious. If you have a swimming pool, if you have a trampoline, if you have a swing set, if you have a tree fort, those things in the past could have been, seen as things that were an open and obvious risk to anybody that chose to use them. Going forward, not necessarily the case. Lawsuit amounts are going to increase and the settlement value is going to increase as well.
Yep. And insurance companies have to respond to that. They didn't make that ruling. They didn't decide that. That's decided by the court system in Michigan. we're just seeing the impact of that on the insurance side. So we won't touch much on this here. What can you do? Your bodily injury liability, that's your auto insurance liability coverage. Your home insurance will also have a liability coverage number. You want to know what that number is. Does that seem like a big chunk of change? Does that seem like a good amount that you could settle most lawsuits against you for? Are you confident in that number? It's probably going to look something like 500,000, maybe 1 million. Do you have an umbrella policy that applies over top of that? That's going to be additional lawsuit protection. All of us in Michigan need to be aware that the protection we have from our liability coverage is watered down a little bit. It was watered down back in 2020 from the new auto insurance law. It's been watered down a little bit more based on that open and obvious ruling. So if we keep the same coverage amount, that's great. We just need to know it doesn't quite give us as much protection as it did in the past. If we want to bump our coverage up a notch to offset that, that's great as well. To file or not to file, Derek, here is the challenging one, right? We as insurance agents, as well as all of our colleagues and everybody else in the industry, we don't enjoy these conversations. Nobody does, because nobody wants to see their insurance costs change because of a claim, right? Tree fell down, windstorm did damage, hailstorm. My car was hit while it was parked at Lowe's. Those are not your fault. You're in the wrong place at the wrong time. Why on earth does your insurance company care, and why are you penalized for that claim going forward? Well, that's the way it works. And just like Derek talked about insurance scoring, it's here to stay. That's what happens. And what insurance companies have found is when there is one claim that was filed in the past few years, those policies are more likely to have a claim in the next few years than a policy that didn't, even when it's a act of nature, it's a hit while parked, it's rear-ended at a stop sign. That's what claims data would tell you. So doesn't seem fair. We are on board with that, but that's the way it works. So Derek, how's that conversation going now? It's a much different conversation than it was 2 or 3 years ago. Why?
Oh, it's still going as poorly as it ever has. I mean, telling clients not to use the insurance they're paying for never is that much fun.
No.
But I would say, previously, we would probably suggest paying out of pocket for something like an at-fault accident where maybe you clipped the side of the garage if the claim was going to be less than $2,000. Today, I guess I would challenge you, Brian, if that were to happen in your instance, what would you say would be your approach for claim payment, and whether you would, file that with the insurance company or you would pay it out of pocket? Is it 3 grand? Is it 5 grand? I know you guys are
Yeah,
kind of living on the edge financially, so I know it can't be more than 5 grand, but
very much so.
what would you say would be, your own approach?
It's a great question. I think it's very specific to that client, not only their financial position and their ability to cover that out of pocket, but also what does that policy look like? What type of claims have been filed in the past? What do we think is going to happen in the next few years? But I think it's important to understand that the number of claims that should be just paid out of pocket and swept under the rug is much higher than it was several years ago. And that threshold, we'll have that conversation. Hey, yeah, let's get a repair estimate. If it's, 2 to 3 thousand, it's in that gray area. Let's get back on the phone and really figure out what to do. If it's less than 2,000, don't bother. It's not in your best interest. If it's more than 3,000, we're going to file it. But that number there, that 2 to 3,000, that's much higher than it was in the past. It maybe used to be 1,000 to 1,500 is kind of that gray area of file or don't file. So it's a conversation you want to have. And we as insurance agents don't have a crystal ball. We can't predict what's going to happen when the policy renews next summer. We can't predict if you're going to be hit while parked this winter, or God forbid you slide on black ice into a curb. But we'll give you the best advice that we can. Most of the time, we're going to be right, or at least right enough that it makes sense. Sometimes we're going to miss. But ask your insurance agent, whether that's Boer Insurance Group or somebody else, hey, I know you can't give me an exact answer, but if this were you and you were in our position, would you file this claim, or would you try to sweep it under the rug? Right? We're going to give you the best advice we can in terms of how that's going to work out in your favor, with the end goal being keeping as much money in your pocket as possible, not just today, but over the next several years.
And like Brian said, the facts of that specific scenario really matter. Was it a 16-year-old driver, or was it a 55-year-old driver? What has the claim history on that policy been? Is there going to be a significant change coming sometime soon, or we're going to have to set up a new insurance plan with another insurance company? All those different factors are going to really weigh on whether it makes sense to file that or not. If someone's got, a very, very competitive low premium, well, hey, a 30%, increase in their rates is going to be, almost meaningless. If they have a very, very high premium because they got a lot of speeding tickets, well, a 30% rate increase is going to be much more substantial from a dollar perspective in that instance. So talk with your agent. They'll be more than happy to give you the best advice they can and put you in the most probable position possible for long-term success when it comes to managing premiums and coverage as well.
Absolutely. Volunteer for high deductibles or be voluntold. Derek, speaking of claims, let's touch just briefly on what we're seeing for deductibles in the insurance world, right? That is a change that has been enacted over the past year and a half. It's going to continue over the next year or so. What are we seeing and how does that impact those of us here in Michigan?
Yeah, well, at this point, every insurance company we work with has a minimum deductible that they're requiring on home insurance. Uh, a lot of times in the past, people had a $500 deductible on their home insurance, in some cases, 1,000. A lot of lenders said if your mortgage is going to be with us, we won't allow more than a $1,000 home insurance deductible. That is so far gone in the current environment. A lot of insurance companies are saying the minimum deductible that they'll offer, the lowest one possible, is $2,500. And in some instances, it's even higher than that. So the idea of using the insurance policy when there's minimal damage to the home, but someone hasn't filed a claim in decades, that's gone because the homeowner now is absorbing much more of the cost when something unfortunate happens because they're going to be forced to have a higher deductible. We're also seeing wind or hail deductibles come into play. Obviously, wind and hailstorms have been very prevalent in Michigan, especially if you're on the northeast side, like our office is up to Rockford. It seems like there's been a little bit of a magnet there for straight line winds as well as a couple tornadoes over the last few years. And the hailstorms have been rampant in West Michigan as well. So insurance companies have now said when it comes to wind or hail, in a lot of cases, your deductible is going to be higher than what your deductible is for a kitchen fire or for burst plumbing or for vandalism to the siding of your house. So insurance companies are making a lot of modifications to the deductibles on insurance policies, not only minimum deductibles, but varying deductibles based on what the actual occurrence was to try to help alleviate these consistent premium increases that we've seen over the last few years due to the claim expenses happening from the home insurance side of things.
And to come in with the good news around that, in the past, Derek and I and our entire business has always been proponents of using high deductibles, right? We like to design the insurance plan to be high coverage, high deductible, low premium, right? But in the past, insurance companies did not give you enough break in the premium for using high deductibles. And they would come in and say, Derek, Brian, we need everybody to be using higher deductibles. We'd say, great, but we can't suggest that when it only knocks $30 a year off the premium. That is not worth it. That is not in our client's best interest. They're finally coming around. Using a higher deductible will often offset four, five, $600 of premium to the point where you can easily stomach the fact that, hey, I've got a higher deductible, but man, I'm putting a fair amount of change back in my pocket, and I'm going to come out ahead over the long run. So, yes, higher deductibles mean you've got a bigger out-of-pocket expense in the event of a claim, but it's only in the event of a claim, and you're seeing a pretty substantial impact on insurance costs for using higher deductibles like that. We
So
make a note.
sorry, so not only the existing insurance policy and the price associated with it is going to be a little bit more manageable from a cost perspective, but Brian, thinking long term, the next year, the year after that, 5 years down the road, having a higher deductible is going to be helpful for what?
For maintaining a good, stable insurance plan, right? If you have several claims, you're going to see massive premium increases. You're going to have really challenging underwriting. You might be stuck with what you've got. Um, Not only are you keeping your insurance costs lower today, but you're helping manage them going forward because you're not going to have any of those small little knick-knack type of claims filed on your policy because you've got a higher deductible. That's great. You just got to be able to prepare your finances accordingly. You've got to have a higher emergency fund. You've got to have a sinking fund for some of these expenses so that you're not SOL in the event that you have something go wrong and have a higher deductible on your
So
insurance plan.
you're making yourself look like a cleaner client with less claims history. You're window dressing yourself to present yourself to the insurance company and say, look, I've got a clean claims history. I've got a high credit score. I pay my premiums on time. I'm using high deductibles, so you know I'm not going to be filing what they call nuisance claims. And that's really what's advantageous when it comes to managing insurance for the long term.
Absolutely. You touched just briefly there on the wind or hail deductible, Derek. We're going to dive in now just briefly in terms of roof coverage, right? This is something that has been on the radar for a couple of years now, and it's still playing itself out. There are going to be more changes and more insurance companies enacting these changes over the next couple of years. So your insurance may not be impacted by this yet, but it almost certainly will be over the next couple of years. So what has happened? I would bet a fair chunk of change that everybody on this call, as long as you own a home, you've had a flyer hung on your door or somebody knocking on your door saying, Mr. Homeowner, there was a big hailstorm that rolled through your neighborhood 2 weeks ago. We just replaced your
Wait.
neighbor's
2 weeks
roof.
ago, was it August 23rd of 2023?
It just so happened to be. Um, and let me get up on that roof and see if we can find some hail damage. That's a great business tactic, right? Because that's a $30,000 roof that they're trying to get covered. And guess who's being paid by that claim? The roofing company. Now, there's nothing wrong with that. They're playing the game, but the game has killed the home insurance industry. They've paid for roof replacements at multiple times the rate that they ever expected that they would. So these
One,
sales tactics from the roofing industry, the door knockers, that has absolutely imploded the home insurance field, and the insurance industry has had to respond with something to try to offset and start to manage that going forward.
and a big part of that is the advanced technology that uh, is available today, right? Most weather tracking services will actually have hail maps, and they're extremely accurate with where hail fell during a storm. So they know exactly where to go and say, hey, let's go on that roof and figure out if we can find a couple indentations and say, this roof needs to be replaced, right? The roof in a lot of cases has not lost any of its integrity. It's going to have the same lifespan, but the insurance policy is designed to repair or replace damaged property. And if I've got an indentation on my shingle, I could argue that that was damage, right? The same way that if I get a scrape on the bumper of my car, I technically have damage to my vehicle. So I think the advancement of technology has caused roofers to be able to pinpoint those things and go find that hail damage that in the past might not have necessarily warranted a claim, but because they're there with all of that additional information, they can search that out and then help the homeowner hopefully file a claim with the insurance company and get the roof replaced. Brian, just to circle back to your beginning of this slide, share with the folks just real briefly how a home insurance policy works when it comes to damage to the roof in the way that it's worked for the last 50 years.
Damage to the roof. There's damage to the roof. The areas that have sustained damage, whether that's missing shingles from the windstorm or indents or destruction from a hailstorm or maybe a tree limb that falls down on the roof, those sections of the roof that have been damaged and sustained damage are going to be paid to be replaced brand new after the home insurance deductible is applied, which was typically $1,000. So it might be a $10,000 roof job. It might be, say, the entire thing was destroyed. Maybe it's a $25,000 roof job. They're going to say, hey, that's great. The whole thing's going to be paid by your home insurance policy. We're going to withhold your $1,000 deductible. Here's $24,000 to replace your roof brand new, even if it's 10 years old, 20 years old, 30 years old. The roof was covered on a brand new or a replacement cost basis.
So if my roof is 30 years old and I plan to get it replaced, let's say in the spring, and it's destroyed by a hailstorm next week, I'm feeling pretty lucky because my insurance policy, despite my roof being at the very, very end of its, usable lifespan, is going to be entirely replaced with a brand new roof by my insurance policy, correct?
Bingo.
Now define actual cash value coverage and explain to our viewers what that means for those insurance companies that are employing actual cash value coverage on roofs.
Sure. Yeah, actual cash value coverage means the depreciated value of that property, the depreciated value of your roof. So, a 25-year-old roof, what is the value of that roof? let's argue it's a 30-year roof. Most roofs don't make it 30 years these days, but let's say you could argue it did. Well, you've got 5 years left on that roof that you lost out on. So the depreciated value of that roof is 5 divided by 30 times the replacement cost of that roof. Or to do some Boer math, a few $1,000s, right? Your 25-year-old roof, when that was destroyed, it needed to be replaced soon anyway. So did you really lose out a whole lot? Probably not. So that actual cash value coverage is just saying, hey, we're paying for this roof only based on the life that was left in the roof when it was destroyed.
Well, Boer math might be a little bit rough, but uh, if you're thinking like I am, you would have said a 30-year-old roof is worth nothing, right? Because it's a 30-year-old shingle, it's 30 years old. Beyond age 30, those shingles had no expected lifespan left. They were worthless. So that's actual cash value. That's one way that insurance companies are helping manage premiums going forward. And there's another way that they're doing it as well, and that's the deductibles that we mentioned previously. So not that many insurance companies are using both of those strategies, but all of them are using one or the other. So they're either going to actual cash value coverage on roofs, meaning they're only going to pay the depreciated value of the damaged shingles, or they're going to a higher deductible. In a lot of cases, it's a percentage of the coverage on the home, and that's going to be the deductible when there's a wind or hail claim for the roof.
So what's the answer? We all should have a sinking fund for not just our roof, but other expenses at our home, of course, right? Anyone who owns a home know that it's expensive to own the home. The mortgage is only one small expense of owning your home. One of the pieces of the puzzle needs to be a sinking fund for the roof replacement. Don't roll the dice and cross your fingers that somehow your 26 or 28-year-old roof is going to have that hailstorm roll through and destroy it right on time. We all need to take more ownership over the roof and the condition of the roof on our home because roofing coverage and roofing claims have dramatically changed in the industry. That's not you. That's not specifically your insurance company. It's happening across the industry. And again, if it hasn't happened yet, it's coming in the next couple of years. So be prepared. Take care of your roof. Get the life out of it as you can. Do the things you can to maintain it, extend the life, and keep it in the best condition as possible. So, Derek, we're going to wrap up here with avoiding common mistakes, right? Something that we like to hit on because there are a lot of ways to optimize your insurance plan without any additional cost, right? There are ways to improve your protection without having to shell out another dollar in your insurance plan. So none of these are complicated. This is not rocket science. These are things that anybody can do. The first one is the auto insurance reform, right? The changes from 2020 that we talked about. Almost all of our clients have that coverage at unlimited, the same way that it always was for everybody in Michigan up until 2020. Don't fall for the couple $100 that it's going to reduce in your auto insurance cost by choosing a lesser coverage amount. We are not a huge office, right? We see claims every year that trigger that coverage at a substantial amount, where if that client had chosen a lesser amount for their own medical coverage from that accident, they would end up in a dramatically different position. If a couple $100 isn't going to change your life, don't roll the dice because having coverage other than unlimited will change your life if, God forbid, you are one of those poor people who are badly injured in a car accident.
But
So
Brian, don't you get paid more if somebody chooses unlimited because it costs a little bit more? And so can we really trust your advice about this?
sure, but those $8 that Boer Insurance Group collects for you having unlimited do not move the needle for us. No, we don't want to see our clients ending up with uncovered medical expenses or, God forbid, not getting the care that they need after a car accident. If you have to find out that your spouse is headed to the hospital after a bad car accident, or God forbid, your child, the last thing you want to think is, I wonder how much coverage is on the table, not just for this hospital visit, but for all the care and all the expenses and all the lingering changes in our lifestyle that are going to be a result of these injuries. So,
Also, most of the cost of the unlimited PIP coverage is state fees that go directly to the state. Insurance companies don't compensate agencies for those. So it has almost no meaning to us. We're just giving the best advice we can, given what we've seen happen to a few individuals when they did not have the appropriate amount of coverage.
absolutely. The umbrella policy. Derek, we have beat our clients over the head about the umbrella. Whether you have one or not, we want you to know that it's available and that we think you should. Whether you are a high earner or whether you're approaching retirement or you've got net worth, we don't really care. An umbrella policy is a really easy way to improve your insurance plan. And a lot of times it costs very, very little. So the umbrella policy is a game changer in protecting your financial plan and helping to make sure that if something goes wrong on the road or goes wrong at your home, you're not going to be sticking your hands in your pockets or in your retirement account or in your assets to pay that lawsuit off using your own funds, right? So the
But
umbrella policy is critical.
but Brian, I'm a safe driver. I've never caused a car accident. Do I really need an umbrella?
That's a great question, Derek. Um, Quick and easy example here. Uh, we had a client several years ago where a drunk driver ran a red light and the passenger in the drunk driver's car died. Horrible scenario. Our client driving home from work at 2 in the morning. Client gets sued. Why? Failure to evade, right? So when something goes wrong on the road, it doesn't matter if you contributed to it or not. If you were involved, the legal system is going to look to you and you're going to be served lawsuit papers. Whether that goes anywhere, that's another story. But oftentimes it does because you were involved. There's going to be some tiny level that you're held accountable for failure to evade. How come other motorists didn't impact that vehicle? How come other people could avoid them? Derek, did you change the brakes on your car? Have you checked the tires recently? Are your eyes starting to go bad? Were you tired at the end of that workday? Did you have a long workday? There are a million ways that they can make that person that we would say had nothing to do to cause that car accident look like they had some responsibility. That's a very scary thought.
You're saying the other driver was drunk and had a passenger in their vehicle that was injured when that drunk driver caused an accident with us and we got sued?
There you go.
Interesting. Got it.
I didn't write the law. That's a really bad scenario, and that's just an example of how things can be manipulated against someone who seemingly had absolutely no fault in that car accident.
They don't have to be 100% liable for the accident. If they're 10% or 20% or 50% liable, that lawsuit's going to still hit them proportionally based on what the value of that person's injuries and potentially their life was.
Yep, yep. Legal ownership here, Derek. What's the point of this, right? Legal. That doesn't sound that hard. Legal ownership. How am I going to mistake that, or what am I going to do wrong here?
Yeah, I think the general rule in the insurance world should be, portrayed to everybody more regularly than it is. You can only insure items that you own. Brian, let's say you happen to cause 3 car accidents this next year, and it's really hard for you to get auto insurance. Well, what if you say, Derek, can you just insure my car for me? Um, I could add it to my policy. You'd get a piece of paper that says it's insured. Is it actually insured? No, I cannot insure your vehicle the same way you can't insure my house. You have to own it in order to insure it. Now, a big question there is, what about if my home is deeded to my trust? I'm the trustee. I live there. It's basically like I own it in my personal name. But if that home is now deeded to a trust, the Boer Family Revocable Trust, the Boer Family Revocable Trust needs to be listed on the insurance policy as the legal owner of that home. So when you're meeting with your attorney and doing estate planning, or Junior turned 16 and you're going to title the car to Junior, make sure that your insurance agent knows how all of your assets are owned and who the legal title holder or deed holder is on your vehicles, your home, your boats, your ATVs, et cetera, et cetera.
Right. It's not like the family cell phone plan where my son in Detroit and my dad in Traverse City and my cousin who's down in Kalamazoo can all be rolled into one cell phone plan. It doesn't work like that. The insurance world follows legal ownership and residency of a household. And then the insurance policy is a two-way contract. So yeah, like Derek said, you might have a piece of paper, but if it's not in the conditions of that contract and doesn't comply with that, you really don't have coverage, and that's a really bad day.
So
Take
Brian,
the
does age 26 mean anything from a auto and home insurance perspective? I hear a lot of that from a health insurance perspective.
It does not has zero impact in your auto and home insurance. Age never has an impact in your auto and home insurance, other than the rating of your policy. The 16-year-old,
So,
a little
yeah,
bit more
yeah. I have a
costly.
couple clients that would like to talk with you after that statement.
I would imagine.
Okay.
The low-hanging fruit, Derek, auto pay. right? Auto pay is a huge benefit to your insurance plan. You don't want to risk not just having maybe a gap in coverage if something didn't get paid because you were down in Florida or the bill got lost. Um, you don't want to have a gap in coverage, and you don't want to have to go through the process of finding another insurance policy after a gap in coverage. That's very challenging and very, very costly. So I know there are people out there that don't like auto pay. They don't want things paid directly from their bank account. I understand, but the risk is not worth that little reward. If you can stomach it, use auto pay. The risk of something canceling because you didn't see the bill or the post office didn't deliver it or you're down in Florida when the bill arrives is not worth it. Use auto pay and know that things are going to be paid when they come due. Move insurance companies. Underwriting is tight. Derek, only move insurance companies if clearly necessary. We're an independent agency, which means that we work with a bunch of different insurance companies. So why on earth would we say that?
Yeah, well, I think the hailstorm is a great example. We've had a few hailstorms over the last couple of years now, and if you move insurance companies and then that roofer comes and knocks on your front door and you say, "Sure, get up on that roof, tell me what you find," and they say, "We've got hail damage," and you go report that to your insurance company. Well, if you've used five different insurance companies over the last 5 years, how can they determine which hailstorm caused that damage, right? They're all going to be saying, not us, not us, not us. If you've had the same insurance company for the last 20 years, guess what? It happened at some point under that policy, and they're going to be paying the damage to the roof. Also, when you switch insurance companies, you lose a lot of longevity with that insurance company. They're never going to disclose that they treat customers differently based on how long they've been with them, but they do. Also, when you're moving insurance companies, they're going to do new underwriting, that they're going to order new driving reports, claims history. They're going to do a new home inspection and potentially have you remove that moss from your roof or trim that large tree. Maybe you're going to have to add railings to your front steps. There's a lot of risk in moving insurance companies. So to do that for $200 today, not worth it. Yes, when we find instances where it's seven, eight, $900, in all likelihood, we're going to at least bring that up with our clients and discuss the opportunity to move the insurance plan, but we're not going to do it for a few pennies because it ends up shooting clients in the foot.
Very good. And make your home look good. Derek, for you, that's one of those do as I say, not as I do type of things. I drove past your house the other day. Goodness, I wouldn't want a new insurance inspection on your home. But for everybody else, uh, homes are being photographed by drones. You see that in the news, right? They all get these bad publicity about the policy that was dropped for drone footage of their roof. Guess what? Not your home has been photographed just like that. Do you like that? No. Do I like that? No. Does Derek like it? Nope, he doesn't like it either. But 99% of all buildings and homes in the continental US have been photographed by low-flying drones in the past 24 months, which means the insurance companies are paying for those images to try to identify, is this roof in decent condition? Are there trees overhanging the home? What's the condition of this property? So you see that in the news. It makes that insurance company look terrible. There was one just, I mean, I get pushed with all these, of course, because of my searches. But Allstate drops one in Georgia, and there's one in Florida from State Farm. All insurance companies do that, and they have that data. So make things look good. It's going to make that process a lot easier. If you ever need to obtain new coverage, or Derek reaches out to you and says, "Hey, Bob, we should consider moving your insurance plan from insurance company A to insurance company B." So to bring us home here, in case you just woke up, uh, focus on the big ticket items, which are liability coverage. How much coverage do you have if it's your worst day and you receive lawsuit papers in the mail? That's a bad day. How much liability coverage do you have? PIP coverage, that's your medical coverage in your auto insurance. That should be at unlimited. The third piece, dwelling coverage. Is your home adequately insured for today's building costs? Number two, file claims wisely. If you're going to file the claim, make sure it's in your best interest. It's not worth filing the small claims. That's going to shoot you in the foot over the coming years. Choose a higher deductible. And even if you don't choose a higher deductible, you might get one anyway. Just know that that's the case. Just be prepared with your emergency fund that in the insurance world, deductibles are higher now, and they will continue to be higher than they've been in the past. Create a sinking fund to replace your roof. We touched on that earlier. Coverage has changed in terms of how it applies to roofs. Just be prepared. PIP on the auto policy. That's one of the big ticket items. Make sure that it's unlimited. Don't take the risk. The couple $100 that that coverage costs is well worth it. And only switch insurance companies if absolutely necessary. Derek talked about some of those things that we help clients consider if we are going to switch insurance companies. And that's a discussion you want to have with your insurance agent.
Unless there are non-clients on the phone call, then it makes sense to join Boer Insurance Group at any time.
That's a great point, Derek. That's a great point. Always happy to bring people on board. So we're going to open it up for some Q&A here. We are at 12:49. So in true Boer fashion, we went just a couple minutes over our promise. So apologies for that. We do have some questions that were messaged over to me. If you have questions or if there's anything specific you'd like to touch on, please send it in the chat. We will answer those questions now. Or if you have follow-up questions specific that you want to have an individual conversation about, Derek and Brian and our entire team are here to help. We sure appreciate you being with us. We sure appreciate your business. We love working with you. The insurance industry is tough. It's been very tough the last couple of years, but we do it because of our clients. We love working with you. We love being your advisors. We love giving you guidance. We like telling it how it is and helping you manage your insurance plan to be as best as it possibly can be. So thank you so much for working with us. Thanks for being with us today. We'll dive into the Q&A right now. So first question, Derek. You're going to love this one. This is a common question, and it's a good question. How do I know how much umbrella coverage to have? I'll
That's
let
a
you
really
hit
tough
that.
one. It's pretty easy. If you've got that crystal ball that I mentioned previously, well, it's going to have some value here. You need as much as the largest lawsuit that you'll receive over your lifespan, right? Hopefully that's nothing. But what a lot of financial advisors will say is you should be looking at enough liability coverage to put that money on the table in a lawsuit against you and have that other party have their life changed materially by the amount that they're getting paid so that they can take that money, go away, and not come after you for the equity in your home, for the amount that's in your investment accounts and your retirement fund. And if that's not enough, your future income. Yes, here in Michigan, if you don't have enough assets to pay off a lawsuit that wasn't entirely covered by insurance, a judge can garnish your wages until that uncovered part is paid off. So, you want to have enough that's going to be meaningful to that other party and make them say, okay, Brian had enough coverage to adequately protect my family due to, the lost income of my spouse because they were killed in an auto accident that Brian caused. He was responsible when he made his insurance coverage decisions. I don't want to ruin Brian and his family's life by going after him personally. I'll take the insurance and just be done with it and go from there. A lot of attorneys and personal injury professionals would say that $3 million is kind of a sweet spot that's going to settle 99% of claims. If you T-bone a school bus and you have a bunch of kids that are injured, that's not going to do it. I don't know if there is enough insurance coverage available for that type of thing. So it's choosing an amount that you feel is adequate and is going to take care of most lawsuits that could potentially be filed against
Yeah,
you.
yeah, good. And to sweeten that pot just a little bit, what you'll find, most umbrella policies are still at 1 million. That's your base umbrella coverage. The cost of bumping that coverage amount from 1 million up to 2 million or 2 million up to 3 million is almost always less than the cost of that initial $1 million. So bumping it up a bit probably costs 50% of the cost of that first million. So it's awfully appetizing to look at taking it from 1 million to 2 million or 2 million to 3 million, because a lot of times you're only talking 90 or 100 or $110 per year to double up that coverage. So if that's something on your radar or that you're considering, ask your insurance agent what it would cost to just bump that umbrella up one notch. It's often very, very cost effective. Derek, question number two. That's a good question. I also saw this in the news. After seeing North Carolina, should everyone have flood insurance? There was an article, there was a story about, of course, nobody in North Carolina there ever expected that they would have flood damage to their homes. What's your thought on flood insurance?
That's a really good question. Yeah, should everybody have it? Probably. Should everybody have earthquake coverage that's offered for most people here in Michigan? Probably. It could happen. But at the end of the day, people need to choose the amount of coverage that they feel comfortable with while maintaining their insurance budget, right? I would probably argue that for somebody that lives, in Rockford, assuming they're not right on the river, I would take the 3 or 4 or 500 bucks that they would pay for flood insurance and bump that umbrella policy up to $5 million. I think that that's a more appropriate use of those insurance dollars than buying flood coverage. But flood insurance is offered through FEMA, through the federal government, so it's very, very heavily regulated. It's a little bit challenging to get. So, yeah, it's something to consider, especially if somebody lives in a flood zone. If you live in a flood zone that's got a likelihood of flooding more than once every 100 years and you have a mortgage on your home, your mortgage company is going to require you to have flood insurance. If they are not requiring it, you're probably in a very low likelihood area of flooding, but that doesn't mean it can't happen, as those people in the North Carolina mountains saw. But I think that's a personal decision when it comes to, what is my true fear of flooding, and if that were to occur, what would I do to repair my home, and could I financially recover from that?
Yeah, yeah. And like you've said before, Derek, you can't insure every risk out there. Or you're going to have nothing left in the budget at the end of the month. So, like you said earlier, deciding where the insurance dollars go and which coverages are most impactful to you and your insurance plan and your financial plan, that's the conversation and that's the decision that needs to be had. Another question here, Derek. Uh, Long-term care insurance. The question is, what do you think about long-term care insurance? Yeah, not really our wheelhouse. Just from a high level, Derek, what are your thoughts if a client asks you about long-term care insurance?
I think it's great that our mom and dad have it. Um,
That's a fair point. That's a fair point. That is a gift to the kids. If you
it's a
have
gift to the
long-term
kids.
care insurance, that is a gift to your kids. Long-term care insurance, not something that we really dip our toes into. It's a conversation with your financial advisor. Talk with them because that's a critical decision and component of your financial plan. The availability and the cost of long-term care insurance has incredibly eroded over the past several of years. It's very tough to qualify. It's very, very expensive. The options and the providers have really narrowed down. So that's one of those risks that a lot of people just have to accept. You have to account for it in your financial plan because long-term care insurance has almost gone away. I wouldn't say that. And again, it's not something that is in our wheelhouse, but that's a great question, something to certainly bring up with your financial advisor. Those are the questions that have been submitted at this point. Any final questions? We would love to field them now. And we've got one more that rang in here, Derek. It is not a question. It is thank you for the information. Great job. Have a wonderful day. Thank you for being with us. That's an easy
Oh,
question.
Aunt Patty, you couldn't have changed your last name to make it look a little bit less planted there, but
Uh, Great
appreciate you
question.
joining us,
Great
Patty.
point.
Thanks,
Great
thanks
point.
everybody for joining us. See a lot of clients that I work with on here. Appreciate you guys spending some time with us, and hopefully you found this informational. And yeah, we're gonna have this recording posted on our website sometime soon. So if you know anybody that might find it informational or benefit from this type of information, feel free to share that with them. We're more than happy to be a resource for the community. So
Bingo. Thanks everybody for being with us today. Thank you for working with us. Thanks for trusting with us. Thanks for talking with us. Thanks for just going on the roller coaster with us. We're so glad to be here. We love serving you and have a great rest of the week. Thanks again.